Hey guys, this is Mr. Roxy coming at you live from Mangonia Park in Palm Beach in Florida. Um, Today is Wednesday. It is April the 14th. And many people have asked me, hey, Mr. Roxy, what's wrong with Oxy? So I thought I'm going to put together a couple of quick slides and just talk about that a little. And then you can tell me what you think in the comments once we get to the end of that. So let's take a look here, and I'll tell you what's going on with Occidental Petroleum. So let me see if I get myself out of the way here. So I called it "What's Wrong with Occidental Petroleum." So at the end of the day, if I start the discussion from the premise of there being something wrong with Occidental Petroleum, then you know, I can certainly find a highlights reel that might be a little bit better suited to a narrative that ends up with nothing is wrong with Occidental Petroleum. But let's look at what's impacted Occidental over the last couple of weeks or so. So the first thing that I do want to look at is the price of WTI. So you can see at a glance here. This is yesterday. The forward contracts or futures on WTI is at around $60, and on Brent it's about 63. We get the occasional downgrades, which impacts Occidental as well. April 12th was 2 days ago. Occidental was downgraded by Wolf Research from peer perform to market perform with a price target of $20. So you guys know by now how this works, right? I always say analyst, schmanalyst. So Wolf says their price target on Occidental is $20. If it hits $20, they say, I told you so. And if it goes to $30, then they just adjust their price target. So it doesn't really make any difference and nobody really cares. So at the end of the day, nobody really cares what the analysts say. So don't pay too much attention to it. You can see this huge drop over here on the far right-hand corner. Obviously, that was at the height of the pandemic in March, April of last year. You see how Oxy dropped along with the rest of the market. But this is the energy sector as a whole, and it recovered nicely. And currently, we're in a little bit of a dip here. So we've had these peaks and dips and peaks and dips and so on. And this thin little blue line over here shows you the S&P 500 index. And you can see it's actually done quite nicely over the past 6 months. That's my time frame here, whilst the energy sector has outperformed the S&P 500 quite significantly. If you look at it over a period of a month, then you can say like, hey, Mr. Roxy, the S&P 500 is up 5%, and look at energy, it's down nearly 10%. Well, that'd be true. And if you look at it over a 6-month period, then you can see the S&P 500 is still doing quite nicely. But over the past 6 months, the energy sector has given us a 40% plus return on investment, which means the energy sector is the leading sector in terms of your return on investment. And if you've been in energy for 6 months or longer, as I have, and probably most of you have as well, then your portfolio is looking quite pretty, despite the fact that energy has pulled down over the last couple of weeks. Billionaire Carl Icahn sold some Occidental Petroleum, so this is important too because it creates downward pressure. Carl Icahn said he was going to sell approximately 30 million shares. At the date of making this video, he has sold some. He hasn't sold all 30 million, so there might be a little bit more downward pressure as more of these shares are sold perhaps in the second quarter. The fact of the matter is, if he sold 30 million shares, he would still own 80 million shares, which means he would still be one of the largest shareholders in Occidental Petroleum. So by no means is he exiting, he's rebalancing, and he even said so himself. Then we have extraordinarily weird things like this: a new Form PX14A6G filed with the Securities and Exchange Commission in the United States. What exactly is a Form PX14A6G that is filed with the SEC? This came to me via email 2 days ago on April the 12th. There's a button here that says view this listing. I took a screenshot of it, and there's a company called Majority Action that says institutional investors, and I'm saying institutional investors because what the little guys like you and I do doesn't really matter. They basically are saying to people like Vanguard and BlackRock, you must vote against Chair Steve Chazen. Dr. Chazen is probably one of the most highly qualified people to be on the board of directors of Occidental Petroleum, in addition to the fact that he was previously the CEO of Occidental Petroleum for a number of years. He is also a PhD, or also has a PhD in geology. This is highly qualified. He has a master's in finance, a PhD in geology. He's an ex-CEO of Occidental Petroleum, but they say, please vote against him and get rid of him. Now, the reason for saying that is to say that Steve Chazen does not support the ambitious decarbonization targets in line with 1.5% degrees Celsius pathways. Well, that is just complete garbage because Vicki Hollub has been public in terms of saying that Occidental actually wants to achieve net zero by 2040, never mind the 2050 target. And Steve Chazen is the chair of the board. So at the end of the day, even if he voted against it, collectively the board agrees with Vicki Hollub in terms of that strategic direction as the existing and current CEO of Occidental Petroleum. So why then did Majority Action file this? So I looked at Majority Action. I didn't know the company. Majority Action empowers shareholders to hold corporations accountable for high standards of corporate governance, blah, 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 blah. It's actually a subsidiary or division or an affiliated company with Act Blue Civics. Act Blue Civics is a tax-exempt organization that primarily funds initiatives that are Democrat-related, and Steve Chazen is a Republican. I didn't know that. I actually just saw that on Wikipedia. So maybe the motivation is more political than anything else. But I don't want to go there because that's a political discussion. Act Blue, by definition, is an action or a PAC in the United States that is focused primarily on blue civics and initiatives, blue being the color of the Democrat Party. And they are quite vocal in terms of supporting only Democrats and not Republicans. And as I said on the Wikipedia page for Stephen Chazen, it says Stephen Chazen is a Republican. I'm not even sure why that is listed on his wiki page, but whatever. So let's stop the noise and maybe take a look at the macro. Lower prices, downward revisions to demand resulting from the pandemic have cut around 1/4 of the value of future oil and gas production. There are a number of countries, especially in the Middle East and Africa. The examples they list here are Iraq and Nigeria. There are also other countries like Venezuela, for instance, who are facing acute fiscal pressures as a result of our high reliance on hydrocarbon revenue. If your entire economy, I think Russia is another example, if your entire economy is hydrocarbon based in terms of driving revenue, you are going to be in a bit of a bind if that is what your entire reliance is based on. You're going to face some fiscal pressure in a down market. The US shale industry, this is just interesting, and it's from the IEA, has met nearly 60% of the increase in demand over the last 10 years. But this rise was fueled by easy credit, which has now dried up. I'm not too sure about that. I think that is actually incorrect because easy credit might have dried up from the point of view of investment into shale, which is debatable in itself, but it certainly hasn't dried up overall because the interest rate is still around 0. So the Fed is still printing money and easy credit therefore has not dried up. That's not true. In 2020, leading oil and gas companies have reduced the reported worth of their assets by more than 50 billion. That is impactful. We know as Occidental shareholders that Oxy has been divesting some of their assets in order to service their debt, and they've done it really nicely. So good job, Occidental Petroleum. More macro. It's too easy to foresee a rapid decline in oil. This is not me saying this. This once again is the IEA. Rising incomes in emerging markets and developing economies create strong underlying demand for mobility. The use of passenger cars will peak for oil, but that's mainly as a result of continued improvements in fuel efficiency and obviously robust growth in the sales of electric cars. The thing with these types of comments are, in the first place, the developing economies create strong underlying demand. People in developing economies, especially in large countries with large populations like India or China, or collectively large areas like Africa, these people have exactly the same aspirations as what we do in terms of not being satisfied by just meeting Maslow's demand theory for the lower levels of demand. So in other words, we are going beyond a situation where people are satisfied if they have shelter, food, clothing, etc. They have the same aspirations that we do, and they are going to be using a variety of products that are actually relatively new to them. Once again, according to the IEA, upward pressure on oil demand increasingly depends on its rising use as a feedstock in the petrochemical sector. And the example that they use here quite correctly is demands for plastics will rise, especially in developing economies. Things that we take for granted and that we are used to in terms of packaging, for example, like plastics, are products many people in those developing countries have never even seen before. So the demand for oil is strong. We're currently running at around just under 100 million barrels per day. And it's going to be that for quite some time in the future, at least 10 to 20 years. So a quick look at Oxy. They in the previous quarter when they reported, they created almost $1 billion in free cash flow, and that was based on a WTI price. And I'm using that as a benchmark because obviously Oxy does other products as well, and some of the free cash flow is generated by OxyChem. But the fact of the matter is they drove that $1 billion of free cash flow when WTI was respectively trading at around $39, $40, $47 during the months of October, November, and December last year, so just over $40. So right now, we're in a situation where WTI over the last quarter has been trading at respectively 52, almost 60, and $62 average for January, February, March. So let's see what Occidental can do with that, because if they can generate almost $1 billion in free cash flow at around $40, then they should be doing quite nicely when the price on average is around $60. We do know that Oxy in Q1 was predicting an average of around 1.1 million barrel oil equivalent per day. And for the year, for 2021, they are guiding to 1.1 million barrels per day. So you can do your own math on that in terms of calculating the revenue and therefore the projected earnings per share, which is always tough to do because you don't know what impairment charges or dispositions or depreciation is going to be included in their financial reports. And then, you can take a stab at the free cash flow and let me know what you think in the comments. So Oxy will hold its next first quarter release on Monday, May the 10th. So we got to wait like almost an entire month before we learn about the first quarter. And then the conference call with all the pretty slides that we can all view and watch. If you have time to join, the conference call will be on May the 11th, which would be the Tuesday, the day after they release their next results. So the question was, what is wrong with Occidental Petroleum? So how about you tell me what's wrong with Occidental Petroleum in the comments, and we'll have some robust discussion to see where we land in terms of whether we should be investing in more Oxy or less Oxy, or whether we should get out of it, or whether we should take some profit, or tell me what you want to do, and let's take it from there. So this is Mr. Oxy saying thanks for watching. See you later. Bye.